Alright, for this video tutorial I want to go over how to prepare a sample amended Form 1040. So in order to amend a Form 1040 you have to file a Form 1040X, okay? 1040X Amended U.S. Individual Income Tax Return. If you need to amend a business return you don't use this, right? There are separate procedures for that. So in this example I've got a couple of pieces in front of us. Obviously we have the 1040X. I have one slide here that contains the fact pattern that we're going to be working with. Okay, so there's some information here we'll come back to. And in order to do this, you're also going to need, obviously, the originally filed 1040. So the Form 1040 that you filed first that you later determined was incorrect. And then the corrected 1040. So once you basically re-prepare that 1040 with the new information, what is that going to look like? So let's start with the slide and then we'll slowly work our way through these forms. Okay, so Form 1040, again, it can be amended by filing a 1040X. Now, the 1040X, previously you had to paper file these. Now the IRS is allowing you to electronically file 1040X, which is a good thing, right? That improves accuracy and processing times. You can still paper file it, obviously, but if you're preparing this with tax return prep software, you likely can do a 1040X electronically. Now, here's the fact pattern we're going to be working with. We have John and Jane. They are married taxpayers, and they're both teachers living in Florida. Now, as a side job, John is a private tutor for students from a different school. So he sets up a Florida LLC. He's the sole owner. It's a disregarded LLC. And he conducts his tutoring business through that LLC. Now, in order to receive payment, John opens a business PayPal account, okay? During the 2021 tax year, John received $7,050 of tutoring income through that PayPal account, and his total business expenses were $3,100. Now, when John and Jane filed their joint 1040 for 2021, they forgot to report the income and expense from John's tutoring business, okay? Now, 2 years after they filed this 1040, John got a notice from the IRS in the mail. All right, so these are called matching notices. Basically, the IRS got a 1099-K from PayPal, which showed that $7,050 of gross payment card transactions, and the IRS could not trace that information to the return. This is very, very common. If you get 1099s and you fail to report that on your tax return, it might generate a tax notice. So John decides he's going to go ahead and prepare an amended 1040 to report the income and the expense and pay whatever extra taxes owed. Now, to be very clear, filing a Form 1040X, even if you're correcting things and you owe some tax, it can very likely subject you to late filing penalties and interest, right? If you owed money, you basically owed money to the IRS for a 2-year period, they're going to penalize you and they're going to subject that payment to interest. So I always recommend consulting with a tax attorney or a CPA to assist with these filings because sometimes the penalties can be huge. So you want to be very careful. All right, so let's look at the original 1040 just so we can get our baseline here. So we've got a John and Jane joint filers, right? Married filing joint. They have no dependents. Here on line 1, they're both teachers, so their combined W-2 wages was $102,500. They have some interest, some capital gains. They are taking the standard deduction for the year, so $25,100, so they're not itemizing. And they've got $12,000 in withholding. The total tax was $9,025, so they got a refund of $2,975. This was the amount of refund they actually got. So when they first filed their return, the IRS gave them a refund for that amount. And so that amount is effectively going to change when we file the amendment. So within the return, we have our Schedule D. We have our Form 8949 for the sale of stocks. And then we have just a supplementary schedule here. This is not filed with the IRS. This is just for our records. Shows how the tax was calculated. Okay, so now let's look at the amended return and to see what they changed. So same filing status, same information up here. Notice the W-2 wages, interest, none of this changed, right? So $1,100 in capital gains, $26 in interest, same wages, right? Because the only thing that's changing here is we're reporting the income from his business, and then it's going to impact a few other elements, but not these three here. Standard deduction remained the same again, $25,100. Okay, so now let's look at some of the changes and how they flowed through. Well, if we start with the Schedule C, because that's the big change here. This is what John should have included, right? Profit or loss from his business. He's got his fake, John Fake LLC obviously is not a real LLC. This is just for educational purposes. But we have John Doe, tutoring business, that's his LLC. And right here we have reported that income, so $7,050, and then he's reported all of his expenses here. So his total expenses are $3,100. His tentative profit or loss is $3,950. Now, how does this impact the return? Well, the first place that this changes, if we scroll up to Schedule 1, Additional Income and Adjustments, there's that $3,950. So the first change here is on Schedule 1, we report business income or loss with the Schedule C for $3,950. Okay, so that's the first change. Now the second change that happens here is the self-employment tax. So if I scroll down here to the self-employment tax, remember, when you are a sole proprietor or you have an LLC that's a disregarded entity and you're engaged in an active ordinary trade or business, you're going to have to pay self-employment taxes. So the self-employment taxes that John owes, there's his profit or loss, $39.50. The total self-employment tax is right here, $558. And then the deductible portion is $279. Okay, remember, when you're self-employed, you're paying both pieces of the payroll tax. You're paying the employer portion and you're paying the employee because you're self-employed. So $558 is the total tax, $279 is the deductible portion. So where do those items end up? If we go up to Schedule 2, so here we go, Schedule 2, additional taxes, there's the amount of self-employment tax he owes, right, $558. And then if we scroll down, scroll up to adjustments to income, we can see $279, the deductible portion of the self-employment tax. Okay, so that's the second big change. Now the third big change is the QBI deduction, right? So if you're engaged in an ordinary trade or business, you likely have a qualified business income deduction, right? So Form 8995 is used to report this. So we have John's LLC here. There's the amount of qualified business income or loss. That is the net income or loss from the Schedule C minus the deductible portion of the self-employment. So that's why it's $3,671 instead of that $3,900 number. Now the QBI deduction is 20%, right here, 20% of your QBI. So 20% times $3,671 is a $734 deduction. Now, where does that end up? All the way back to page 1. So page 1, line 13, there's the QBI deduction. Okay, and so for these other elements here, you can see the changes too, right? So line 8, we now have $3,950 as self-employment income. We have adjustments, $279 deductible, 1/2 of the self-employment tax, and then we got the QBI deduction. So all of these adjustments impact our bottom line taxable income number. Okay, so that's overall the biggest change. Our taxable income is now $81,464 rather than previously it was $78,527. Okay, so our income has gone up. That makes sense, right? We're reporting income that previously was not reported. Okay, now let's look at how all this meshes on the 1040X. Here's the layout of the 1040X, right? So we have the same information on the taxpayers up here, right? Married filing joint, John and Jane. And the way this is broken out, we have 3 columns. So we have the original amounts, the change, and then the correct amounts. The original amounts should be traceable to the originally filed return. So if we look at lines 1 and 2, for example, the original amount of AGI is $103,627. The original itemized deduction or standard deduction, depending on what you claim, $25,100. So if we look at the original return, we can see those amounts here, right? There's $103,627, and then there's the $25,100. So what you want to do is fill in column A with the original items that were on the tax return. All right, the total tax here, $9,025. That can be traced to page 2 of the original return. See here, total tax, $9,025. Okay, then the correct amount here is obviously the corrected numbers, right? So if we look at our amended 1040 here, we have updated AGI. We have the same standard deduction, right? So we have updated AGI of $107,298. We have the same standard. Here on line 4B, we now have a qualified business income deduction, 734, that's good. And then we have the updated tax number. Line 9, we have other taxes. Note here, this is the self-employment tax, right? It wasn't on the original return. It is now on the corrected return. So what I recommend doing is if you're filling this out by hand, fill in the original column, fill in the corrected column, and then subtract the two to get the net change, okay? Now, at the bottom here, you've got to do a little simple math, right? So total payments, right, $12,000. This is the federal withholding. Again, that didn't change, right? Now, on line 18, overpayment as shown on the original return. So $2,975 was the original amount of their tax refund. That's what they actually got. So that number goes there on 2,975. Line 19, it asks us to subtract line 18 from 17, and that's what we do. Line 18, 2,975, subtracted from $12,000 on line 17, okay? That's the $9,025 number. Then, here is the amount you owe or the amount that's going to be refunded to you. In this case, we owe money, right? So if line 11, column C, is more than line 19, enter the difference. So if we look at line 11, column C, right here. Line 11, column C is $9,980. This amount is more than line 19, $9,025. So the difference, $955, that's the tax we owe. And again, logically, this makes sense, right? We owe money to the IRS because we failed to report net income from our trade or business. So we owe $955. Now, on the second page here, part 1, dependents. If you have updates to dependents, you complete this. Obviously, we don't have any dependents. They don't have any qualifying children or dependents, so this can be left blank. Part 2, you can update this if you want to donate to this presidential election campaign fund. Go ahead and leave that blank. I think they've got enough money. Okay, now the explanation of changes, you should include a narrative here. It doesn't have to be too detailed, but just include some sort of explanation as to the changes you're making, right? So in this case, taxpayers are filing this to amend the return to include a Schedule C to report ordinary trade or business income, okay? Now, the signature block. If you filed a joint return, even if you didn't report income for just one spouse, because it's a joint return, both individuals have to file this and sign it. So both John and Jane would sign, Jay enter their occupation, and then the return is ready to go. Now, what I also recommend doing, and this isn't necessarily required in all circumstances, but in addition to filing this 1040X, if you're going to submit it via paper, I would also attach a new version of the 1040, and you can write up here as amended, right? So as amended return, something to that effect. And so that way the IRS gets a complete record of the changes. So Schedule 1 obviously updated, Schedule 2 updated here for the additional taxes, right? The self-employment tax. Schedule C was added. The $89.95 was added for the Qbi deduction, right? The self-employment worksheet, all of this stuff, if you give that to the IRS and they have a complete picture now, it'll help expedite the processing of your refund claim or your whatever you might owe with the 1040X, and it just makes life easier. So, so that covers it for the 1040X. Again, a very simple example, but a very common one that I see in practice because people will just forget to include 1099s, right? Honest mistake, or perhaps you thought mistakenly that your business operated at a loss, so you didn't have to do anything. Even if you have a loss from your business, you should be filing a Schedule C to report that trade or business loss, right? So even in cases where your profit or loss here might be a negative number, still file a Schedule C. You still have to report the gross income and then the expenses attributed to that business. Okay, so that covers it for this video. Thanks so much for watching. If you have any questions, please leave me a comment below, and I look forward to seeing you again on the next video. Thank you.